Hello, everybody. Welcome back to the channel. My name's Max. My co-host is my little dog, Jackson. He's right here. Jackson, you want to make an appearance? Come here. Come here. Come on. Come here. Wants a treat. Come here. Get up here, Jackson. Oh, look at this dog. Look how good this dog is. All right, Jackson, go sit down. I filled your food bowl up. Happy Sunday night. Welcome to the Sunday night live stream. It's always good to get an appearance from Jax. On tonight's agenda, we're going to look at the market. Of course, we'll always start off looking at the market. It's just, we can kind of talk about whatever we want. We're also going to check out the lightning spread strategy, ULTY blocks, and LFGY, otherwise known as the terrific trio. And I'm also going to talk about my video from yesterday that was called Let's Get Realistic About ULTY. I had a pretty good reaction from that video. There's still a few people that don't get it, but that's fine. But I did want to respond to one comment, one particularly uninformed comment I got. You guys will like that. Then I'm going to also give the Reader's Digest version of that video and kind of make the case for it again in kind of a short way. Maybe we could even look at the future value calculator or whatever. In any event, then let's do what was next. And then we're going to talk about my new show, which is called The Daily Factor. And that's based on the Max Factor, which is my uber popular weekly show, which rates all these funds on a risk adjusted return basis. And it kind of ties in with ULTY and everything, kind of ties in with what we're going to be talking about with ULTY and kind of some of the basic misunderstandings that some people have. I think most people are getting it now. If you have any questions about the ULTY video or about the new or about the Max Factor itself, or about the new show, The Daily Factor, let me know. Put it in the comments. So I'll try to get to it, and I will try to get to it. All right. Well, thank you so much for being here, everybody, and let's get this show on the road. Hey, Mike, thank you for being here. Thank you to the other 11 people that are here besides Mike. I bet 5 of them are also named Mike or Michael or Mark. That's my bet. Mark, Marcus, Mike, and Michael. Usually we have at least 3 or 4 out of every 10 people we have, seems like. All right, I need to put a little sweetener in my drink. I like this seltzer water, but I also like sugar and caffeine. All right, guys. Let's see, like I say, let's get this show on the road. Let's look at the market. Of course, I was checking out gold. We'll look at gold in a second. I know everyone else isn't obsessed about gold. I may need to dump that thing. That chart's looking bad. We'll talk about that in a second. All right. So the thing I'm excited about, is Bitcoin. As Bitcoin rallied all weekend, and it's still rallying right now, and it should lead the market to open higher. I made the comment the other day that a good pairs trade would be long Bitcoin, short the market, because Bitcoin's been in the dumps. The market hit an all-time high the other day. They can't both be right. So that would have been a good pairs trade. But in this case, and I was saying it when Bitcoin was around 110. So anyway, it looks like the Bitcoin's going to be the winning side of that. But either Bitcoin will go back up, or the market's fixing to dump, and you would print on some SPY puts, a month out or something. But they both can't win. I don't see them keeping going the same direction. Anyway, now look at this. These are Bitcoin futures, so this doesn't trade all weekend. But Bitcoin itself, the physical asset, trades 24/7. But anyway, Bitcoin futures do have the ability to make a gap. So let's just put the gap in here. This is definitely a bullish gap. Heck yeah, look at that. All right, so you guys know what bullish gaps mean. They're bullish until they aren't, I guess. Or if we get prices back down into there, we probably expect buyers to be there. All right, so that's Bitcoin, and that should put a bid under the market. And let's see if it is. I'm sure it is. No, not Eversource Energy. I'm sorry. How about S&P futures? Yes, and that is putting a bid under the market. S&P futures is up 2/3 of a point, and also leaving behind a huge gap. that's good to see. There was a gap the other day also. They gapped over the old high to the new all-time high. Now we have bullish gaps underneath this. I guess let's go look at the SPYs to see that. The SPYs only trade during the day, so they're more prone to gapping. But yeah, so we left behind this gap the other day. If prices decline, got back into there, would be a nice place to buy the dip, most likely, just kind of like what happened here, or what happened here when prices go out of a gap and come back into a bullish gap. Lots of times you're still resting orders there, so it's a good place to buy the dip. There's people that didn't get filled, that their order got skipped over, but they'll still buy if prices ever get back to that level. Well, now we're going to have, and I'm just estimating, but now we're going to have by tomorrow morning, we'll see by tomorrow morning if it's still here, but we're probably going to have something like that. SPY show a 24 hours quote? No, it's not showing a 24-hour quote. Anyway, but that should be something else in the morning. We'll see if it's still there, but even if it isn't, like I say, here'd be a good place to buy the dip potentially. Here'd be a good place to buy the dip anyway. All right, guys. Well, that's the SPY. The Qs are closed, but we'll still look at them just as for comparison. The Qs will do the same thing. They should leave behind another gap if this holds. I guess let's look at Q futures, otherwise known as NASDAQ, NQ futures. Qs don't really have futures. I was just joking. The Qs are based on the NASDAQ 100 index, but the NASDAQ futures, they're the dog that wags the tail, as they trade. They trade more frequently, and that's also what pros trade is the futures. And it doesn't make you sick to see pros making all this. They're the ones that make all this money overnight. That's until guys like Matthew Tuttle and Sai Katara and the guys at Roundhill figured out how to take advantage of the night effect. And the guys at Yolmax on SDTY and QDTY figured out how to take advantage of the night cap and figured out how the night effect, which is the effect in the market that in a bullish market, the market tends to get most of its gains at night. In a bearish market, it's the opposite. So, but in a bullish market, you have something called the night effect. And that's it's a good time not to, I'm sorry, Jackson, I kicked Jackson by mistake. That's a good time not to be encumbered by options. And that's what T-SPY's doing. Psychotar over at Tap Alpha, as well as the guys at Yomax SDTY, the guys at Roundhill XDTE, and also Matthew Tuttle at Tuttle Capital with BITK. They're selling 0 DTE options. So they do have capped upside during the day, but then at nighttime, the markets, it's just, they aren't capped. So they capture all that upside, and it's been a really good plan. And there's other ways to capture extra upside also, but being uncapped at night is a really good plan. So using 0 DTE options gives you that flexibility, where people that use 30-day options and 1-week options, they can't just uncap at night. They put them on for a week, so they're capped the whole time. The other side of that is 30-day options and 7-day options pay a lot bigger premium. So they get rewarded for it. And they get paid extra to accept the cap. Let's just say that. All right, guys. Well, what was second on our agenda? I think we looked at everything on the market we wanted to see. There's some earnings trades coming up this week that I'm excited about. Second on the agenda was, I guess I could go back here. Yeah, futures and crypto, everything's up tonight. It's a good night. Okay, so I guess we wanted to talk about, gosh darn it. I have this new feature that I'm in love with, and you guys can probably tell because I'm not very good at doing it yet. But they've added a teleprompter service on here, so I can, anyway. I guess I don't have to show you guys to do it though. But anyway, it's really cool. So I guess next, let's go talk about the lightning spread. Let's go kind of run the gamut on the spreadsheets. And also let's look at blocks and ULTY and see what stocks they're in for tomorrow, as well as LFGY, otherwise known as the terrific trio. But yeah, I'm in love with this feature. You guys can't see it unless I'm showing it to you like I am now. Anyway, hopefully it'll make my reporting better, more effective, and maybe less distracting if I'm always staring away at my notes and stuff. All right, so let's get over here to this. Oh, this is actually the new max factor, and we're actually going to talk about this also, and but we'll get back to that in a second. So here is the terrific trio. Now, the terrific trio is we chart the allocations and the stock positions, the stock trades of these three funds. These three funds are basically hedge fundy style funds, as far as they can pretty much choose any stock they want, and they have the ability to do a wide variety of sophisticated option strategies. But in any event, let's look at ULTY first. So here's ULTY's positions right now. This is in column C is the daily change. That's Friday's daily change. Well, in column B is the weightings, and those are the weightings as of now, as of the end of the day on Friday. So anyway, we're loaded up on Palantir. We have 6.8% of the account in Palantir, and we have 6.19% in Robinhood, 7% in Rocket Lab. We could look at this in a picture format. It makes it a little bit easier. Now the red line is the daily change. So for instance, here's Palantir at 6.81. This is the blue line, and they were up 2.3 on Friday. It was actually one of the lower ones that was up. I mean, look at Iron, and boy, look at Cypher. I mean, my Lord, what a great idea. Now this is ULTY. Now ULTY runs a collar strategy, and as such, they're fully capped, and they definitely didn't catch all 19% of this, but they probably caught a good deal of it. They may have even rolled out, who knows, or they probably rolled out at the end of the day and adjusted their position. So they're doing well. I just watched a video, and I'd highly recommend anyone watching it that's serious about ULTY like myself. It is ETF Inspector, and he does the best job covering these. I just watched his dividend estimate video. These guys cleaned up last week. ULTY made 12.9 cents, no return of capital, according to his calculations. I mean, winning trades. They won $39 million on some puts that they took off at the low, and then the market turned around. So they didn't even need them, but they monetized them. I mean, these guys are doing a great job. And I don't think they're going to pay a 12-cent dividend, but they have that much. They could. It's possible. He thinks around 9, and I think around 9 also. But it should be a great payday tomorrow. Anyway, they had a few stocks that didn't cooperate on Friday. Symbotic was down, Qubit was down, SoundHound was down, Rigetti was down, but pretty much everything else was up. The market's up tomorrow. I mean, it'll hopefully this thing will keep going. This thing is an absolute monster. All right, so now let's check out LFGY. Now LFGY is from YieldMax. It's similar to ULTY, but they don't do callers. A caller has limited upside and limited downside, and it's mainly the reason people like callers is because of the limited downside. They have protected puts. Well, LFGY says we don't need any of that limited downside. They do a different strategy. They basically sell covered calls. Now they usually sell a spread, and that uncaps part of the upside, but they don't mess with puts. So it's just a different strategy. But lots of times the guys at LFGY buy similar stocks, and on an up day, lots of times the guys at LFGY will do better. And then the third stock, BLOX, will do even better still because they have still a different strategy that uncaps their upside even more, but they have the least downside protection of the three. Anyway, back to LFGY. So, let's just go and look at the pictures of it. Okay, so look at this. HUT was up 17%. Looks like these guys didn't have any Cypher, but they had HUT. They had Coinbase, which was up 9% on Friday. CleanSpark up 9%. Same types of companies in all three of these funds. The high beta companies, which generally high beta means, well, LFGY restricts themselves to DeFi companies. ULTY does some DeFi, but they'll take anything that's high beta. So the lowest IV stock that ULTY has in the stable right now is Lululemon. It's only like a 40 vol, but still a 40 vol, but. All right. So now these guys only had one losing, a couple. GME, they only had one stock that was down more than 1%. GME was down 1.4. This one, NU, was barely down. So, everything else looks good. This ETF is a monster too. I just prefer ULTY personally, but I mean, but this one has a use case also. I don't need both of them. They're very similar, and I'd rather have the downside protection, and I'm not quite as worried about the upside. The upside in ULTY comes from, you know, the yield. Yeah, they get a little bit upside also based on where they put their collars, but you know, in ULTY, they're paying, you know, 85, 90% yield. So in fact, if they do pay 9.2 cents, like ETF inspectors said they might, and I concur, I think that's right in line with what they'll pay. It comes out to a 90% dividend. That's one of their highest dividends in a while. And of course, the NAVs come down a little bit lately, so that's part of the deal. But in any event, you know, it's part of the deal. That's why I made that video. It's just kind of the way it goes. But all right, so that's LFGY. That's looking good. Now let's look at blocks. I don't have my lightning spread report up here. I don't think anyone really cares about the lightning spread. We looked at it the other day. It's trailing a little bit. It's a little bit behind the market. It's about all we're going to show. There's no stock holdings to show because they just sell options on the whole index. You just get the whole index with them. But let's finish up over here with this blocks. Now this thing is the beast of all beast, you know, in a bullish market especially. Now their biggest holdings are HODL, FBTC, and ETHA. Those are some good ones. But then those just own Bitcoin and Ether. Those are just ETFs that own Bitcoin and Ether. So they have pretty much direct exposure to Bitcoin and Ether in about, what is that, 39, 40% of the portfolio. But then in the other 60% of the portfolio, they buy stocks similar to ULTY, similar to LFGY. And so they have, let's see if they had HUT, they had Mara. Did they not have Cypher? I bet they're sick they didn't have Cypher. But anyway, you can't win them all. These guys do a great job. Look at over here at the right, it shows how much blocks itself was up. It was up 5.52%. The average stock in their stable was up 5.98%. That's 90% of the upside they caught. They're basically unencumbered on the upside because of the way they structured their option, their overlay strategy. I won't bore you with that tonight, but I've talked about it many times before. But, you know, these guys are monsters on the upside. They get a little bit of extra downside, though, you know, be that as it may. And I also would put WPay and YMAX in the same category because they're widely diversified portfolios. But in WPay and YMAX, they don't switch the stocks in and out. It's not as interesting to look at on a daily basis, but those are also good strategies. But these are the most interesting trading type vehicles. And I like to see what stocks are trading. I know the guys on my Discord will follow along with their trades. Maybe not follow the trade, but when they put a new stock in, they might follow, they might try to buy that stock or try to profit along with these guys. So that's the main reason for showing these every night. In fact, I know some people that took advantage of IRIN. This thing was in a month ago, and it's been nothing short of outstanding. Let's look at IRIN. Let's look at IRIN. I think it's about a month ago. And then Cypher, I think some guys in my Discord jumped on the Cypher train. Now IRIN and here's the problem with ULTY. And that's why ULTY's pulled back lately. A lot of people didn't really realize what they're doing with ULTY, and they sold out or they got margin called out, you know, I think Thursday night or something when the market pulled back. The reason ULTY pulled back is because Bitcoin pulled back, and it has a lot of exposure to Bitcoin. And even the stocks in ULTY that aren't directly Bitcoin, it still is affected by that economy and stuff. But yeah, they put IRIN in the portfolio, I'd say sometime in September. You know, probably around 36. It's trading at 62 now. It's been as high as 74, something like that. So definitely want to keep an eye on what they're doing. These guys are professional traders, and these are probably some of the coolest products, maybe the coolest financial products I've ever seen, or the most exciting to follow anyway. This blocks, ULTY, LFGY, and the rest of them too. SEPI could go in here as well, but once again, SEPI has similar stocks. I think they just change their stocks in and out once a quarter, but it's also another alternative that does the same type of thing. CEPI, who's that from? Same people as FEPI, and I'm wearing my FEPI shirt again. I guess I wore it on Friday too. I've done laundry since then, I assure you. But all right, well, Yeah, iron's a monster. So let's go back to the terrible trio or the terrific trio. I was naming it ironically when I call it the terrible trio. I think the market was pulling back whenever, all three of these stocks got hit in the pullback bad because they're all tied to Bitcoin. What did Bitcoin do? It went as high as 128. One of the guys in my Discord sold it at like 122 and bought it back at 105. Why can't I ever do something like that? Anyway, but my point is, when something goes from 100, NASDAQ goes from 128 to, it was at 110 on Friday. What is that? It's 18 points on something, it's a serious pullback, and it's going to affect these ETFs that hold a bunch of those assets. All right. So, but yeah, Blocks is incredible. Look at this. Blocks did not have any stock that was down. I was giving Blocks a hard time about not having Cypher, but they do. I just didn't see it. Blocks has Cypher. I should have known that. And they have HUD 8. They got Cypher, HUD 8, Iron, and Coinbase that were all up 10%. I mean, that, and here we have Circle up 9. I mean, and these guys have this basically uncapped upside strategy. My Lord. It's a great time to be an investor. All right. So let's do a little of this now. Let's talk about my video from yesterday called "Let's Get Realistic About ULTY." So I don't have a script for this. I don't have a script for this, but I got it. I don't know. Did you guys hear? I'm going to get back on the comments here, so I can see you guys react in real time. Anyway, the reason I made the video, and if you guys have heard this before, maybe some of you guys in here have, but there's influencers out there saying, well, if this could only drop, if this could just stay stable, there's influencers, I'm going to buy this. And if it stays stable, I'm going to, but if it goes out of the 6s, I'm out. And I told people back then, I said, yeah, it's going to, about a month ago, I said, yeah, it's going to go to the 5s and it's going to go to the 4. It's going to go to the 3s. And people think I hate this. No, I love it. I love this stock, but that's just math. That's just the way it works. You have to know what you own. So what I wanted to do is I put out a video that actually looks at the past performance. I guess we can, let's look at this. Let me show you what I came up with. So all I did was I put the price down, the price on the first day. Then I put the price at the end of the first month, the price at the end of the second month, price at the end of the third month, fourth month, fifth month. Then when I got to the 12 month, I took the 12-month change in price. Well, it was down $11.68, or that equals 58%. Okay. So, and that's been in a rip-roaring bull market. I mean, that's last February through this February. So that's before the April pullback even. But, but anyway, so then, the next rolling 12-month period, March through March, it was down 61%, April through April, down 61% just on NAV. Now, of course, these guys pay monstrous dividends, so people are still making money. I'm up about 25% on my investment in ULTY right now. I eyeballed it the other day, and it's about 25%. But I'm on full drip. I'm not trying to live off it. I don't have margin. I'm just snowballing it and just trying to turn it into free money here. It's probably take 3 or 4 years at this rate, maybe four or 5 years. I don't know, but I love this thing. These guys are doing a great job. But anyway, you can see that you can see sometimes they, they're only down 54%. This time, July through July, they were down 50%. Okay. 48%, 45% here, 48%. Anyway, so, and what I did is I did a regression analysis between ULTY's NAV performance and the Qs, because the Qs is a good proxy for ULTY. All of ULTY stocks are in the NASDAQ. The NASDAQ is also generally tech growth stocks. There's not a perfect parent for the Q for ULTY because they switch stocks in and out really fast. But the Qs are like 87% correlated to it, and as close as I could get. So what I came up with is I came up with a formula. So and basically here it is. You can expect to lose in an average year for the Qs. The Qs are up 10, 15, 20, 25, 30%. I'm calling that kind of an average, general year or whatever. you could expect to lose between 50 and 60% of your NAV. Now, once again, it's paying like an 85% yield, but that's also why it's important to watch the trades and make sure that 85% yield keeps up. If volatility crashes and they're no longer able to make that 85% yield, I would rethink my position on ULTY. But right now, I'll trade 50 all day long for 85 all day long. And, and lots of times they yield over 100, but they've had months also where they've yielded less, and, it depends on volatility. So it's kind of a static thing with a lot of moving parts. I also added 3-month periods in here to get the best of ULTY, which would be April, May, and June. Went straight up, and then July, August, September till the other day was kind of the worst of ULTY. Anyway, I thought it was a really good video, and I wasn't trying to talk people into buying it. I don't think anyone would watch my video and want to buy ULTY, but there's too many influencers that are banking on ULTY, only be down 15% a year and then running a future value calculator on it. Now that's possible. ULTY might only be down 15% in a year. For that to happen, the Qs needed to be up about 75%, based on past history. So that could definitely happen. And wouldn't that be a wonderful thing? Because not only would your ULTY be raging, but of course, if you listen to me, you don't put all your money in high yields. It's for 10, 20% of your portfolio, just where you need income. If you have money, hopefully at work, a 401k and growth assets, or even if you have a business or something and the market's going up, the economy's going great, that's the whole idea. If you have a home, a business, and a 401k, you're long the U.S. economy, and so you're a bull there. So anyway, it definitely, there could be an instance where ULTY's only down 15%, and boy, wouldn't that be great? Because you're trading 15 for 85. I mean, my gosh. But once again, that's, the chance of the market being up 75%, it could happen. It was up 40% a few years ago. It was up, I think, 90% during .com one year, maybe 100, something like that. So it could happen. But what really got me is people running a future value calculator showing ULTY with a 15% decline. And like that could happen 1 year, maybe 2 years. But for that to happen 10 years in a row, it'd be wonderful. I'd be all about it. But, the other thing is, plus, if you knew the market was going up that high, you could just own the stock and sell options. You could sell your own options. That's one alternative. The market's going to go up like that. You could also just own the stock and just sell a little bit each month to pay for your needs. That's a legit way to do it also. You don't have to use options. There's also closed-end funds. There's also business development corporations. There's also bonds. There's also, there's all kinds of other options besides options. I just kind of specialize in them because that's kind of what I like. But anyway, from here, I want to go into the max. This kind of ties into the max factor. Because what the max factor does, we kind of drilled down on ULTY, and I kind of gave you guys the Reader's Digest, but what the max factor does is it puts on one line the relationship that I just described for ULTY, but it keeps track of that relationship for all stocks. Well, what did the NAV do? What did the underlyings NAV do? How much volatility does this fund have? Anyway, it crunches the numbers and it finds, in my opinion, really good risk. It finds companies that have been demonstrating stellar performance lately. Let's just say that. And also protecting capital and giving you the max factor it's the max factor. It wants the highest yield possible, but the highest yield, just not at any cost. If we wanted just the absolute highest yield possible, we could just sort by yield, right? And but I bet we don't want Murney, do we? We don't want Fiat or ICOI. Do you want ICOI? It's not a bad one, but I'm saying these are the riskiest ones out there. And Murney should be at the top of this. Oh, I can't believe Murney's fallen off the top of this. Murney must have been rallying. Murney used to be on the top of this. Lots of times, if you just go blindly for high yield, the high yield's part of the equation. And the problem is the fund managers, they'll just tell you, well, just look at total return. And that's right. That is how you keep score. Total return is the final score of the ball game. but I want to see how the darn team played. Did they get blown out on the line? Were they behind 40 points at halftime and then they came back because of a lucky turnover or something? Or, it doesn't only matter what the final score is, it matters how you play the darn game, right? That's what the max factor tries to give you. So if you sort by, instead of sorting just by high yield, I mean, high yield's part of it. Don't get me wrong. Let's sort by max factor, and it's going to find us some high yield ones with hopefully a little bit more quality. And sure enough, here's number 11 on the max factor, TSLY, yielding 108%. Okay, well, I mean, it's yielding 108% and its NAV is up positive on the quarter. And it has a total return of 43%. That's NAV and dividends. That's NAV growth or decline and dividend payments all together rolled into one over a year. So Tesla's a monster. Some of these other ones may have a little bit lower yield, but they have, in my opinion, a lot better risk-adjusted reward. And I want to drill down on a couple of these. We're going to look at some bond ones and some other stuff, but that's pretty much all I had for my talk I wanted to give. So put questions in the comments or whatever, but and we're going to talk a little bit more about the max factor. So today we're going to talk about some specific companies. Oh, and the Daily Factor Show, I think is going to be a good show. Let me tell you about that before I forget. So the Daily Factor Show, so on Saturday, we do the top 20 countdown. I make graphics and stuff, but every day I'm going to plan out something different. So maybe on Mondays are going to be Maximum Mondays. And so we're going to look at Bitcoin funds, Maxi Monday or whatever. Today we looked at bonds. And it's because I'm trying to think about dumping my position in TLTW. It's never been just the greatest fund. Somebody in my Discord told me that they just lowered their yield. And of course, that'll show up in the max factor eventually. But so I'm looking for, possibly a new bond fund. So anyway, but we'll also, one day we might drill down on index funds, on diversified funds. We'll probably look at a different sector of the economy every day, but kind of get in deep. And you guys can ask me on this daily show. I don't know if it'll be a live, it'll probably be pre-recorded. But you guys can also ask questions, or you can put them in Discord if you have a request or you want me to evaluate your favorite company. Wonder if you really like AIYY. You just ask me, hey, could you make one? Hey, Max, could you make one that does the AI companies? And we'll line up all the AI companies and we'll look at them on a risk-adjusted reward basis, apples to apples, and we'll see what we have. And I think that'd be a good idea for a show. The Saturday show with the top 20 countdown will still be there. But I have a lot more improvements than that planned for the max factor. But for now, let me show you what I wanted to talk about tonight. Okay, so I did a bond comparison. So TLTW is a covered call fund based on bonds. Then we have TLTI for NEOS. That thing only has 3 or 4 million assets under management. I think I can see why though, but we'll get into that. Then there's Bond I. And then there's TLTP. Now, I didn't have TLTP in the max factor, and I'm so sorry about that. Somebody in Discord, that's where I get all my information, is from my Discord. My Discord is a wealth of information. I have this pretty sharp guys in there, a lot of really sharp guys. And so somebody reminded me, hey, TLTP's one that I'm looking at, and I was thinking, oh gosh, I don't think that's in the max factor. Anyway, so this is an addendum to today's show. So we looked at just TLTW, TLTI, and Bond I. Let's throw TLTP in there and kind of take a quick look and see if it compares. Okay, so on the trailing 12-month yield really doesn't matter because it's dependent on what the NAV's price is. I mean, the actual dollars and cents don't matter. But anyway, it paid $256 in the past 12 months. And I guess we could look at the price. The closing price the other day was 23. So you can see right there, it's 11.17%. But the thing I like to look at is the price 90 days ago. So this thing was priced $22, $22.40 90 days ago. Now it's $23.19. That's about $1.50 up on a NAV percentage basis. It means up 3.5 for the quarter. That's pretty good. Now this thing has an ultra low volatility, and although it's not as low as BNDI has a really low volatility. But anyway, okay, let's just look at this. So it's kind of hard to tell because some of them are better on this thing. Some of them are better on the other thing, but the max factor, let's just look at the max factor. We'll sort it by max factor. and it's TLTW's tough. I mean, notwithstanding that they're lowering their dividend, but that's, so it comes in first place TLTW, second place TLTP. So the use case for TLTP is, look, this pays almost as much, or it has paid almost as much yield as TLTW. Its NAV doesn't do quite as well. It's made 4%, where this one's made 6%. Its NAV's only about 2/3, but that's not bad. And volatility is pretty much identical. Another problem, though, is if you roll it back a year and just look at the past year performance, TLTW has done better over the past year. As of what I've seen right now, I'm sticking with TLTW, but this is kind of the use case for the max factor. And I was also going to show you in the main database, I highlighted in yellow if I made any changes. I wanted to show you guys a few other changes. Let's see. TLTI. Well, I also added STRC, otherwise known as Stretch, the preferred stock for MicroStrategy, Stride, and then TLTP. I guess that's all. But I want to talk about the max factor. Doesn't have to be high yield funds. It just has to be a fund that pays a dividend and pays, or a distribution, and pays at least 5%. Now I have a couple in there that I gave an exemption to. For instance, SCHD is in here just for education purposes, just to have something to compare it against. I think Vanguard has a high yield fund. We should probably put it in here too, that does dividend growth stocks. Because in certain markets, this one might be, but I think it's VYIM or something. I'll do that on my own time, but Vanguard, VH or VYHI or something. I'll do that on my own time, but we also have some closed-end funds in there, and those do pay, at least Cornerstone pays like 20% plus, it depends. And we also have a closed-end fund called CEFS. So anything could be in here. It doesn't have to be, it can be. And then we have preferred stocks, STRC and STRD are preferred stocks, but they're paying a 9 or 10% yield. So everything has a risk-adjusted reward. All of these have trade-offs. None of them are free money, right? So anyway, let's see what you guys have on your mind. I also had a letter I wanted to respond to. A comment about my thing. Maybe we can look at that. Maybe we can look at that, comment on that, unless there's something you guys want to talk about. All right. So you think people fled ULTY early last week and sold out without thinking the fund will always pay high income via volatility? Well, I wouldn't say that. Because volatility can come crashing down. I've seen it happen before. It happened in 2015 and 16. The other side of that, though, is when that happens, the market has generally been in an extended bull market for several years. So the assets that they have in it should be going higher. You should have it better NAV, but I wouldn't really say volatility should always be high, but high compared to other stuff for sure, just because of what they're doing. It should be higher always than other stuff for sure. Yeah, you can reinvest half, you can reinvest all. Some people don't reinvest any. But yeah, I get you. I think that's a solid plan. Misty holders should be happy tomorrow. Wouldn't that be great? I love my Misty Mafia guys. I'm not one of you. I can't do single stocks. I wouldn't know the difference between a Bitcoin if it bit me on the butt. You know what I'm saying? I don't know. I'm a 59-year-old man. I don't know anything about this stuff, but I look at risk-adjusted reward, and I think the best way to play these things, instead of getting a wallet and doing cold storage and all that kind of stuff, that's fine too. I'll just let the ETFs handle the custody and stuff like that, and either buy an ETF or buy a fund that trades stocks in these. I'm a stock guy, and things like Cypher and things like Mara and things like Mister. So I love my Misty Mafia, and those guys have been patient, and I can't wait for them to have a great day today. What is Misty up in the? How much is Misty up? Or are you just saying that because Bitcoin's killing it? I thought maybe we could get a look at Misty. Maybe if they have a 24-hour quote. I think they do, but it's not on this package. I'd have to go to Robinhood. Somebody go to Robinhood and put up the 24-hour price of Misty up. It closed at 1173 the other day. But yeah, hopefully it's raging tomorrow. And then we have Mr. Hopefully this thing is raging tomorrow also. We don't have a 24-hour price, but I'm sure this is up. What does that say in 4 days? They have earnings in 4 days. Now, this is going to be a heck of a week as far as earnings go. Also, a lot of interesting earnings plays this week. Probably the biggest earnings week of the season. Anyway, all right, let me try to stay focused here. Hey, Froggy, thanks for being here. Appreciate you as usual. Okay, if it consistently loses 50% NAV, you might be better off going with the fund. Yeah, absolutely. Wonder if you, well, here's the thing though. Okay, so with losing 50% NAV, that's half the equation. Did you hear what else I said? I said, and it's paying an 85% yield. But, there's plenty of juice left over there. But yes, if you don't want to deal with that, especially if you aren't on drip, if you're using margin, or if you aren't on drip, and so you aren't kind of monetizing the loss, monetizing the price going down, or gamifying the price going down. Yeah, maybe you'd be happier with something like, or maybe with something that just pays 12% and maybe the NAV goes up. So, something like Big Y, it's only going to pay 12% as a target fund, but it uses monthly options, which don't cap the upside very much at all. So it could easily have a year where maybe the NAV's up 20 or 30%. Like I say, what does it take for ULTY to have a good, year? I mean, it takes the Qs being up. So if the Qs are up 30%, well, that's fine. But if the Qs are up 30%, go get Big Y. It's only going to pay you 12%, but then it'll probably catch 20% of that upside. So you'll get 32% overall. Well, if you're losing 50% of the, NAV on average in ULTY, it depends. It could be 60, it could be 40, and the amount of the dividend can distribute. But if that's kind of the math, the rule of thumb, and you aren't cool with that, heck yeah. But the thing is, 85 minus 50, and I mean, it's about 30%. You're gonna, there's no free money, so it makes sense that you could do it either way you wanted, and that's exactly why I made the video. It is for people that aren't cool with that happening to the NAV. Just don't listen to the other influencers that have 100,000 subscribers and are running future value calculations showing 20,000 turn into 2 million. I just think that's dangerous. But it's just me though. It's just me. If you DCA and reinvest, you're only down half that on paper. You guys are talking. If you put somebody else's comment, I'm going to try not to read it because I like you guys talk amongst yourself. I'm looking forward to target 20. Yes, absolutely, it might be a sweet spot. And I think everyone's sweet spot's different. So if I had to put all my money, obviously I wouldn't put all my money in any of these high yield funds. My gosh. But most of your money is for in your 401k, your growth, VOO, VTI, SPY, Qs, whatever. Let your financial planners do that. But yes, for a portion of, but even like with 10% of my portfolio, for my high income portfolio, I wouldn't put all 10% of that in ULTY. But what I do is I have about a quarter of it in ULTY to raise my yield. But then I have other ones like, but you guys know I talk about them all the time, like GDXY. And I have lots of them that pay 20 and 30 and some that pay 10, and you put it all together and it's, and it's a reasonable fund. But absolutely. Yeah, I think you guys get it and I'm preaching the choir, but when I put out these videos, sometimes I get a comment from somebody that doesn't get it. And I'm not trying to dunk on this person. I mean, but maybe we'll go read that comment and talk about that. So it's not for everybody for sure. And so that WPay is a great option. I'd put WPay in the same category as blocks because they're both going to have a little extra upside and they should do way better on the upside than LFGY or ULTY. Okay, but you aren't making as much yield, but that's fine because you're doing better on the upside. But the problem with those are because of the leverage, you're going to get a little extra downside. Blocks doesn't use leverage, but it structures options in such a way that they're prone to maybe getting probably getting extra downside. I'm not talking out of school. David Nicholas was on my show and he said that. I mean, and then you heard Matthew Tuttle the other day, and he said that too, that, that put spreads are great, but in a big down move where it goes through your strikes, you get a little extra downside. That's kind of the payoff. Closed-end funds are on Robinhood now. That's good. Were people having problems with Robinhood not paying your dividend or something? I saw something about that in Discord. Or is it Robinhood? Yeah, I think it was Robinhood. Anyway, hopefully they get that cleared up, but that's ridiculous. These people are counting on their money or, it's costing you. Even if you don't want to spend the money, you wanted to drip it. Let's say the dividend paid Thursday. I don't know when it did, but let's say you were supposed to pay Thursday. Well, Thursday would have been a great day to drip because the market was down, and if they don't pay your money till next Wednesday, and by next Wednesday, the market's up, they've cost you money. yeah, that's no good. And I never have had any problems with Tasty Trade, but anyway, I hope that's not happening anymore. ULTY does pay, but you have to look at your total return, and a lot of brokerage firms don't update the snapshot to show it. Yeah, so I was trying to break down mine, and you know what really surprised me today? So I got in like my first trade in December. I paid like $11, $11.19 or something for ULTY. But I wasn't trying to time it. I was just trying to put some money to work, and I put some money to work. But then in April, when the pullback happened, then as soon as it was over, I got some more, and I got in at 573. But my average price is 7, and I couldn't figure out how that happens. Because like 11 plus 6 is 17. Well, I guess that, I guess that does make sense. Oh, anyway, forget about that. Whatever it was, my average price looked too low. Well, the reason my average price was lower than just the difference between the two stocks was I have more than, I couldn't believe this. I have more than double my share count due to DRIP. So, I mean, and I wasn't even factoring that in when I said, well, yeah, I was factoring that in, but yeah, ULTY's been great for me. But to be honest, had I not put in another allocation into the April lows, I'd only be up like 5 or 6%. So there's no guarantees in life. I mean, when you're doing these, yield's not total return. That's the number one thing most people get mixed up. They see the yield, and even maybe people tell them it's not total return. They just hope. They go, well, yeah, but maybe the NAV could just stay flat for 6 months, and I could just, I mean, anyway. So TLTW's NAV has consistently been going up, though you might want to wait until after the next rate cut. Yeah. Now TLTW is in the bond business, and bonds have been on fire lately because interest rates are coming down. And remember, with bonds, prices and rates move the different way. So if rates go lower, prices go higher. So if interest rates come down, that's the market the TLT likes. And you can see, yeah, TLT's been on fire lately, moving. It broke out a few months ago out of this trading range at 88, and here we are up here at 92. Now, that's not the move of the century, but yes, it's definitely moving the right direction. I thought, if you ever had one of those phantom vibrations where you feel your pocket vibrate? Well, my phone's over there, but I swear to goodness, I just had a phantom vibration. Anyway, all right. Well, but yeah, TLTW, the reason TLTW's been doing so well is because it's long TLT, and then they sell they do an option overlay to pay you a little income. But yeah, anyway, great job on that. I mean, patting myself on the back. Also, gold's been on fire, and I have GDXY, so that's been doing well there. Now, let me talk about that really fast. I'm gonna weave over into this lane. I'm just not liking the looks of this because of all this overhead supply, or what, GDX. Let's look at GDX. I never look at the stocks, at the high yield stocks. I just look at the parent asset and try to do technical analysis on the parent asset because remember, the high yield stocks pay the dividends coming out all the time. So their price, you can't really look at it for technical analysis. But I am worried sick about all this overhead supply. And you can see we got back up in there the other day or close to it, and it sold off. But this big gap right here, there's people, maybe people like me, who wanted to get out at 80, and then, it opens Tuesday morning at 74. And a lot of people are like saying to themselves, I promise if it gets back there, if it gets halfway back there, I'm going to sell. Or maybe people have resting orders, and if there does rally up there, not that it can't go through there, but I'm afraid there's going to be some resting orders up there and some people that wants to get out. So for me to turn bullish on GDX again, I'm going to have to see it chew through these orders, and it may take some time. It may have to go into 2 or 3 times, then eventually go through it. We can see the same phenomenon in Coinbase. Let me show you. The Coinbase is kind of a good use case for what happens with overhead supply. Remember, they had earnings, so they had earnings, and it went from 375 to 337, and there was people that were just sick. They didn't get a piece of that, and so it got back up here into this gap here. Anytime it got close, there's just pressure on it. Eventually, it got here. There were still sellers. Boom, they slammed it down to here. anyway, eventually this last push finally got it through. But I think now the coast is somewhat clear on well, actually they got through the gap and then fell back into the gap, and now they're back down. They basically got stuck back down here in this trading range, but there's probably still some overhead supply. So it was definitely there. Anyway, that's probably what I'm kind of anticipating for GDX. So I may need to think about doing something my GDXY position, just especially if I get a rally up in there. I just don't like the looks of that on a technical basis. All right, so sorry to kind of go off on a tangent there. You guys are talking amongst yourself. Thank you for putting the other guy's name up there, because if you have the other guy's name, I won't even read it. Just put Max if you want me to read it. If it doesn't say anything, I'll read it. Do I believe in TSYY and the put strategy? Just watch an influencer trashing it. Okay, well, I know that I have Y-Spy and I've had good luck with it. Let's do this. We'll have Tesla Tuesdays. How about that, Taz? We'll have Tesla Tuesdays. I'm trying to get something going on this, this show, the Daily Factor. On Tuesday, let's just line up everything in the Tesla thing. And I'll make a recorded video with the script, and I'll do some work. I might even design a graphic or something. But yeah, we'll have Tesla Tuesday and Maxi Mondays. All right. And we'll address that. I mean, just real quick. I don't know. I don't really believe or not believe in any of these. I mean, I like Granite shares. I like what they're doing. I've had good luck with Y-Spy, but it's not the be all and end all. But but so let's just go see what the Max Factor is saying just really quick. We aren't going to do a full Tesla Tuesday, but let's just see, what the Max Factor thinks of it. Let's see how it's been doing the past month, and then maybe I'll tell you if I like it a little. I have to look at data. In other words, I'll let the data tell me, data driven. TQQY, which, we were looking at TSSY, right? Gosh, I don't have the short-term memory. TQQY I also want to talk about. But yeah, it was TSYY. That's what it is. I always want to say TS. I always get it messed up. All right. But yeah, generally I believe in all of these generally, but there's a lot of factors. So would you look? Oh, there it is. I was going to say, my gosh, it's not in there, but it absolutely is. Okay, so they paid $12 worth of dividends, which is 195% pay. Okay, that's good. Unfortunately, the bad news is it's gone from $9.11 to $7.60 in the past 3 months. Not the end of the world when it's paying 195% yield. There's still some left over for you. I promise you that. But I mean, you do have to consider, heck, the quarterly now is down 16%. So, something to look at. It's a 39 on volatility. It's not, you could tell yourself, hey, this isn't nearly as volatile as Misty. That's like a 50 or a lot of them, Coney, Misty. There are a lot of them are, 50s and 60s. MST is traditionally the most volatile, and it's the leverage plus income from Defiance MicroStrategy space. But yeah, I don't mind this. It's 40 vols kind of mid pack. It's losing NAV, but it hasn't lost that much, but it is a little bit alarming that it's lost that much NAV on Tesla, because Tesla's been in a really good bull run. Anyway, tune in on Tuesdays and we'll line them up against the other ones and see what your choices are. I would say just initially that one's, it's going to be a higher risk one, be careful with it is all I would say, but just initially, but we'll line them up against the other Tesla ones. You know me, I think that YieldMax does the best job generally. And I bet you if we look at it, TSLY or TSLW, Round Hill also does a good job, and so does Curve. I would bet you that one of those has better metrics, but tune in on Tuesday. Or if you can't wait till Tuesday, hit me up at Discord and I'll do a personal review for you. And it's no big deal, but try to wait till Tuesday. Okay, you could be wrong here, but you think nearly all Granite shares ETFs use a partial put strategy. Well, let's try to figure that out. There's nothing I like more than trying to figure out these strategies. Try to find a prospectus. Let's try to find some evidence of it or another influencer who's saying it. Give me some more information and I'll check into it. For you. Okay, Max, when can we expect CLO to turn? And what should we be looking for? I'm looking at CCIF. Okay, well, let's just look over at FinViz really quick. CLO, let's take a look at this thing. Um, CLO generally means, well, collateralized loan obligations. I wasn't really sure. Let me look back. Let me look at your question again for some context. You're looking at CCIF. Maybe let's punch in CCIF. Oh, I got big news also. I can't really say anything about it yet, but I got an invitation from an influencer to be on his show, and he has a lot of subs, and it's not Rod, but it's somebody well respected that has a lot of subs, and I'm looking forward to it. It's going to be really good, I think, for my channel, and just it's somebody that I normally maybe not want to collaborate with, but or not want, but anyway, I was excited about that. And I think you saw my ULTY video. A lot of good things are happening as a result of that ULTY video. I still can't seem to make anyone happy. The ULTY, people that love ULTY think I'm being too negative. What do you mean it's going to go down 50 or 60% area? No, it won't. Not if you drip, not if, but then there's the other people that think I'm shilling for yield max. You think I'm shilling for yield max, and I'm telling you that they're not. I mean, I'm just telling you the facts. I'm data driven. I'm about data. I'm sorry to get sidetracked so much. CCIF. I need an assistant. Mike Coe has somebody that sits there and feeds them the questions that come from the audience. As you get bigger, you can't look at all the questions. And Mike looks at the questions himself, but keeps them on track and feeds them slides with the stuff in it. So anyway, I'll try to get better at this influence and stuff. CCIF, Carlisle Credit Income Fund. Well, yeah, I don't know that much about this, but I'll tell you this. I like that. Look at this, a 23% yield. Maybe I need to learn about this. Why isn't this in the max factor? Would you like me to put it in the max factor? I'd be happy to do it. Let's slap this baby in the max factor. I mean, anything that pays that kind of yield, especially if it's monthly, maybe we shouldn't have quarterly ones in there. No one's going to really, to be a high yield fund. I mean, we'll put quarterly ones in there, but really high yield, you really have to pay monthly, really have to pay weekly, but at least monthly. Let's just slap this in there. And then, if it starts doing well or keeps doing well, we'll have it to look at. I'm sorry, I don't know anything about CLO, or I haven't heard of this. I can't keep track of all of them. All right, CCIF, hang on. That's the wrong place to put it. So many choices out there for investors. Since we're talking about it, let's just look at it really quick. So it's paid $1.26. It's only a $5 ETF though, so that's 23%. It's gone from 566 to 538, so it's lost like 27 cents or 22 cents, something like that. 28 cents. I don't know, about 18 cents, something like that. And so the NAV's down 5, but it pays 23%. Well, there's some left over for you. I mean, there has been this quarter, and it's a 20 vol. Okay. So that's fine. I mean, anything 20 vol and under is, pretty good compared to some of these, pretty non-volatile. Unfortunately for the past year though, on a total return basis. So that includes the yield. If you look back a year over the past quarter, it's been doing well. Looks like it's positive over the past quarter. Over the past year, it's bleeding a little bit, down 18.9% total return. So anyway, we'll definitely keep an eye on that. Thanks for bringing it to my attention. If you guys ever see anything that I'm not, that isn't in here that needs to be sure to tell me about it. They got excluded from the S&P 500. Is that why it started dropping, or they were supposed to be put in and everyone thought they were going to go in and then they didn't go in or something? 1212 is Misty on. 1212. Okay. And it was, what was it? 1173 or 11s. I already forgot what it was, but let's go back here. 1212. Okay. Thank you for pulling that up. I appreciate it. I could have pulled up Robinhood too. It's not just for members. I think they give the quotes to anybody. One night I was looking at it. It was the night ULTY was crashing, or it wasn't really crashing. It was getting margin call. I guess it was crashing. Yeah. So 212 is that? Oh no, that's Mr. That's Mr. Right. You're talking Miss T. You can't take me anywhere. Like I say, I need somebody. I need hopefully someday I'll have, 50, 100,000 people here in 5 years or something. And I'll hire people to help me, and that'll be great. I'll put an ad in the Texas paper. The requirements will be college. I'm trying to get a college girl to help me. I'm just joking. Anyway. All right. So 1173 to 1212. Yeah, that's monstrous. They're going to be really happy tomorrow. What is that? 12 plus 27, whatever that is, 39 cents up on something that costs $12. Does that 4% or something? That's really going to make people happy, and I'm glad to see that. Thank you for the information, Mike. I appreciate you. Yeah, Mike, you're late, but it's fine. It's fine. We haven't really been talking about that much. I'm getting ready to react to a letter that might be fun. Or let's see. Was there somebody told me, somebody said, hey, just so you know, and I never even looked at this I never even considered this kind of stuff. Just so you know, TLTW announced they cut their dividend. And somebody in Discord said that. I could go back and look, but yeah, Frog has been paying 40 to 50 and last payment was 14 cents. Yeah. What I do is I just look at money in and money out. But I need to pay attention to that kind of stuff too. And the reason I do that is because generally I like the funds that just pay as much as they can. And so those kind of funds are incentivized, like ULTY, those kind of funds are going to give you all the money. That's the deal. On TLTW, maybe not so much. Some funds actually do announce dividends and do really manage them. So I guess I need to start paying attention to that more. Thanks for that information, Greg. Maybe they just had a bad month. Maybe they got an option, went in the money, and they had a big loss or something. Remember, these things have variance. In other words, when you sell options, you win 6 out of 10 times, but you don't win an even amount. You don't win 60% every 10 times. The first 10 occurrences, you might win 9 of those 10. Then the next one, you might win 1. The next one, you might win 3, and it averages to 6, but that's variance. That's what makes me sad. Whenever I get a comment and somebody says, I bought ULTY, I get this comment all the time. I bought ULTY for an experiment 9 weeks ago and I've been dripping, but I'm still down and I had to sell out. Well, it's 9 weeks. Anyway, but you do you, but I really need to, I'm going to make a video and I'm going to try to explain how variance works. And just kind of how math works. It'd be great if it came out even, so most of these funds, they do have a built-in advantage. So selling options is an advantage, and a lot of them have underlines that generally go up, the index ones especially, but it doesn't mean they go up all the time. And lots of times the market trends. So, you may have a downtrend and you'll get more losers, but then you might get more winners. It just, the variance in your profit has to work itself out over a large number of occurrences. Anyone here who's a tasty trader, that's what they always say, tasty trade. They just want the most number of occurrences possible. They're selling puts, selling calls, selling spreads, whatever. Everything they do has a built-in advantage, a little advantage, but they just want to do it enough times and just run their money through there enough times. That, that's my idea with these covered call funds too. You can't buy it 9 weeks for an experiment and then you can, but you run the risk of getting out just because you ran through a bad spell and then maybe a good spell comes next. You can do whatever you want, but I wouldn't recommend that. All right. You lose. Oh yeah. I used to get phantom vibrations. I started getting them before anyone invented the name. And it was probably back when Blackberries were a thing. And I told my buddy, Ron, I said, Ron, does this ever happen to you? I have the strangest thing where I feel like my phone's ringing. He said, oh my gosh, that happens to me too. This was probably 2008, 2009. So I got on Google and searched it, and Google wasn't as good back then, but I typed in, and sure enough, it was a thing called phantom vibrations, but I thought I was the one that came up with that or whatever. I think it happens to everybody. Okay, you guys are talking amongst yourself. TLT could have gone through their calls too. Yeah, they had to roll to get their share. They may have, yeah, sure, exactly. They could have variance. That's an example of variance. They're doing well. Maybe the shares are still going the right direction, but maybe they placed an option too close to the money because they couldn't get enough. And where it happens. It happens. Lower vols equal less premium. Correct, Greg. Speaking of gold miners, there's SLJY. Is SLJY part of is that one in the max factor? I think it but let's just check really quick. First thing we have to check, is it eligible yet? I'm not sure it's a quarter old, but let's check. And on gold, we'll probably have we'll have a day, precious metals day also. Maybe that'll be Wednesday. I really want to have a day where my favorite funds are ones like ULTY, LFGY, FEPI, ones that have at least 15 or 20 stocks, or 50 stocks like Big Y, or 100 stocks like JEPI or JEPQ. I really think I'm going to do an index. There's just not a day that starts with an I, but I really think we're going to have one day where we look at the diversified stocks, maybe diversified Thursday or something. I don't know. But we will do. What have I already agreed to? So tomorrow is Maxi Monday, and Tuesday is Tesla Tuesday. And then maybe Wednesday we'll do diversified, index Wednesday or whatever. All right. So let's see, SLJY. So this is junior miners. Now SLJ is the underlying, right? Or, well, I thought there was an index called SLJY, and they probably just put a Y on the end of it. Maybe not, but I didn't see the SLJ pop up with the suggestions. But anyway, let's see how long these guys have been out, how they've been doing, and get them in the max factor if they aren't already there. But then we'll have precious metal Thursday, and I don't know. But I'm trying to make some more engaging content that's more than just looking at spreadsheets. I'll have Claude make a graphic and stuff, and where we can maybe look at it, and maybe I could even have Claude make something that I can hand out to you guys or something, for those that are interested. All right. So no, this hasn't been around 3 months yet. But as soon as it has been, we'll put it in there. What was their first dividend? SLJY, but it was a big one because the price was going up and it's been volatile lately. The thing about commodities like gold and like oil, the price can rise at the same time the volatility rises. We're generally in the market that's opposite. You need the market to drop for the volatility to rise. But especially in oil, generally a rip-roaring bull market will have higher IV. So that creates convexity for you. Convexity is an asymmetric tailwind at your back. The same thing happens in bond rallies. In fact, bonds have convexity, and that's really when I started hearing the word convexity is based on bonds, but bonds get convex in a rip-roaring bond market. So that could happen to Misty. It happened to Misty one time too. Well, there was one time that Mister went up to an all-time high a few summers ago, and Misty's volatility went up at the same time. And that, unfortunately, a lot of people invested then because they thought it would continue. But that's not usual for stocks. But in commodities, it can be usual. So that's one of the advantages to commodity covered call funds. All right. So SLJY, what's this thing doing? So it's only paid 2%, but it's not even, we'll put it in there. We'll absolutely put it in there. We'll put it in there when it's time. All right. You're way down on, God, I hate to hear that. I hate to hear that. I'm sorry. Does anyone think it'll climb back to 540? If the market will keep going up, it will, but I don't know. I think over time it'll go lower. In an average market over time, it'll go lower, but in the short term, it could go up to 540. And I'm talking the NAV, the total return. I'm not, not hating on ULTY. ULTY's a great stock, but in my opinion, anyway, Max, there's a lot of earnings coming out this week. How do you think it'll affect your portfolio? I don't know, but I need to look at my high yield stocks, and I need to see which one of them have earnings this week. We'll talk about that on the morning show. Maybe I'll highlight I need to make an infographic for my portfolio and see which ones have earnings. Maybe we can even hedge a couple of them. For instance, if let's say I had a lot of Misty, I don't have a lot of Misty. I have a few shares. I actually have like 3 or 4%. I just have a few shares. But I just kind of hold on to it for sentimental reasons. I did have like 10 or 15%, but I panicked whenever the market started dropping. And anyway, but I accidentally didn't sell all of it. And because I didn't have my glasses on. So I just held the little bit I have. I'm just going to let it drip and, go to the moon, baby. but in other words, if I have a large position in Misty, say I was working with say you have $100,000 portfolio. So hopefully you had $2 million somewhere else. So you have, 10%, 20%, whatever, in your $100,000 income portfolio. Let's say 50,000 of it's in Mister. And let's say the Mister's been going up lately. And so in Misty's fine, or 50% of it's in Misty. Misty's finally been doing better. And you're like, thank gosh. And you're like, man, if we miss earnings and it's going to take all this progress we made away, maybe it might be smart to buy a put, not in Misty, in Mister. And then if they do miss earnings bad, at least you can cash in on your put. Anyway, thank you on the TSYY. That's just a quick look, but we'll do Tesla Tuesday. We will definitely do Tesla Tuesday. We should really do Misty Monday. Maybe I'll do two things. Maybe I'll do Maxi Monday. Well, Misty is part of Maxi. Misty and Maxi Monday, because I'll put Misty in with the Maxis. I'll put Misty and Coney in with the BTCIs and the BCCs and all of them. Yeah. Well, the Misty Mondays will be fun. I figured it was CLOs. CCIF pays a 20% dividend. Hey, Josh, I don't know if I've seen you in here before. I just don't remember anyone named Josh, but I appreciate it. Josh. Thank you so much for being here. You've probably been here before. Maybe I just didn't notice. CEOs buying shares. Okay, good. So in what? Let's go back. Oh, and CCIF. Nice. So yeah, maybe that's a good one. We'll keep an eye on it in the max factor. If the collateralized loan obligation market turns, this could be good. A big discount. Yeah. There's something else that I'm just going to weave into this lane. Somebody was not giving me a hard time, but somebody saying, CLM has rights offerings, don't you? I go, yeah, I know all about it. I just can't quantify it. And they said, well, the dripping at NAV and the difference, but you buy it at a premium, but it drips to NAV or something. Anyway, they say that added 19% or something to their return. I can't really find a good way to quantify that in the max factor. So I'm just going with the published prices, but just know that on CLM and maybe on other closed-end funds that my number's a little low. And I'll try to think of a way to address that. It's mainly an option index. The max factor is mainly for option people. Like I say, options aren't the only way to do it. So I want to have ones to compare it with. And I could see maybe in like a really bad market, the option funds all go down, and because they're tied to stocks, and maybe that's when the closed-end funds and the other things really start to shine. Maybe they'll all rise to the top. Who knows? Who knows? Yeah. Good evening, SB. Thank you so much for being here. I appreciate it. 9:50 to 9. I'm going to try not to keep you guys too late. Master limited partnerships are good income funds, and usually in oil. So yeah, they usually get a tailwind if you have a good oil market, which it looks like we might be getting into one. Looks like we're going to war in Venezuela. I heard that was it the Ford? Yeah, one of our aircraft carriers. And so if it's an aircraft carrier, it's not just them. There's like 10 or 20 ships and planes that go with an aircraft carrier. So an aircraft carrier battle group is relocating from the Mediterranean Sea to off the coast of Venezuela. So, I just kind of think that's kind of a waste of fuel. But I guess we're going to go, when we go to Venezuela, maybe we'll steal enough oil from them to make up for it or something. I don't know. Great tax treatment. Yeah, and good tax treatment as well. Okay, so there's only one more thing I have planned to talk about, and this might be fun because I wanted to clear up. I wanted to address a comment. I answered, and one thing, I never have taken down a bad comment. I had one guy tell me, Max, you talk so much but say so little. I don't think it's a compliment. I left it up. I've had people in here tell me I'm stupid. I always leave all the comments up, even the trolly ones. And this wasn't a trolly comment, but if there's a bad comment, I don't get my feelings hurt and take it down. You can't hurt my feelings. But I got kind of a little bit of a negative comment. I wanted to just kind of give my 2 cents and kind of clear it up. Maybe the person misunderstood. I think that maybe they were, I don't know. But anyway, it might spark a conversation with us as well. Maybe you guys will want to, if you guys have any questions about that ULTY video, if you want to argue with me about it, put it in the comments. Or if you have you don't think I'm right, or you have your own opinion or whatever, I'd be happy to look at your side of it. Anyone that's effective, that's an effective teacher or an effective debater or whatever, you have to be able to see the other side. If there's something that I have blinders on and I can't see, tell me about it. Say, Max, what are you doing? Tell me about it. I'll listen to anything. So let's go here to these comments, and let me just show you this one. I didn't answer it in I usually answer them in person. I started typing out, then I thought, no, this will be good for the show tonight. But after I do this, unless there's any comments or unless there's anything else you guys want to talk about, you guys can be excused. I know it's 10:17 on the East Coast. You guys need to go to bed. Did you guys see the video I posted, that big buck? First thing this morning, I went out and there was a giant buck. I mean, giant. He had a gray muzzle. I don't know if you call it a muzzle on a buck, but on a dog, it'd be a muzzle. He was gray. He was muscled up. His neck was just, the ruts on here, and they get extra testosterone shows in their neck. He was a hoss. He could barely move his neck, and his rack was it was one of those really tall. He was massive. Anyway, I put him on the internet. I didn't have a good picture of him, but later on in the day, he came back, and I got him on a 4K camera real close to him. He is gorgeous. I'll do a YouTube live, or not a live. I'll do a YouTube short. Be looking for that. Well, I named him Haas. His name is Haas. I always name the bucks. Last year, I had a buck named Elon. The reason I named him Elon is because he was an 11-pointer. I usually try to name them something that reminds me of their physical characteristics, so next time I see him. And this one had a split tine. He was a 10-pointer, but he had a split tine. I don't know if that counts for 11, but when you counted him, it was 11. So, but yeah, he was Elon, but this is different. This guy's actually only a 9-pointer. He's only a 9-pointer. He had one of his rear tines, one of his ones back here is split in two. So, or is growing two different directions, but man, he is beautiful. Anyway, the rut's on here, and these guys come out of the, they don't usually hang out by us, but they come out and they're looking for does. The does all hang out here because my neighbor feeds them, and I keep a big water bucket out there. And anyway, all right, so let's look here. But yeah, I was really happy with the way this video turned out for the most part. The Let's Get Realistic about ULTY, I think, is my best video in a while. I think it really got across what I was trying to say. But I still think some people, you can't, some people may have misunderstood it. Okay, so here it was. It says, you guys spend so much time defending NAV erosion like it's supposed to be a normal occurrence. Either you are paid to promote this garbage and you're so blinded by their advertised yield, which is so misleading, and that is correct. And anyway, I'll talk about that in a second, that you are just leading your followers, that's you guys, into financial ruin. Anyone inside of these funds is stuck on a cruel, heartless, sticky trap with these things, dying a slow death of eventual starvation, unless they decide to cut their losses. And a lot of what that person says is correct. I mean, the yield is totally misleading. That's one of my biggest, what do I always say? And I just think this person probably watched the video and didn't see the whole video and has never seen my show. You guys know, because I say it all the time, there's no free money. And not only is there no free money, yield is not total return. I mean, that's pretty much the reason I started making this station. I was because Rod was the only one doing content. He wasn't the greatest at describing the option trades. So I thought, okay, I can make a station and explain to people how these option trades are working. But Rod does a great job at everything else, but he was just learning options at the time. But then also, so then when I got in here, I saw the yield chasing community, and I saw what was happening. People were seeing the, an 80% yield, and they were thinking it's total return. Or some of them, to be more conservative, they might say, okay, I'll just get one that's a 40% yield because I want to, I don't want that NAV erosion. But that's 40% is not total return either. No yield is ever total return. That now there are occasions where, and this is what messes people up. There's a time or two where Misty has actually made its yield, and Coney and stuff. I mean, it's possible, but it's not a typical occurrence. So anyway, it is a normal occurrence in these really high yield ones. And of course the erosions, there's too many things with this to even talk about, but yeah, unfortunately it is a normal occurrence, and that's what I was trying to do. And you guys understand that, but I don't think they really understand that I'm not trying to put people in these. Also, I've never accepted a dime from any of these companies, and they've never offered. and I know a lot of other influencers, and they've never, as far as I know, they've never offered a dime to anyone. But no, my first priority is you guys. I'm trying to tell you guys what they want. So a lot of these, let's take the other side. A lot of these fund managers are talking their book. That's their job. That's their job. I'm not saying anything bad about them, but they come on and they say, yeah, you have to look at the total return. Yeah, okay, you do have to look at the total return, but that's why I made the max factor. The total return's a little bit deceiving. Like I say, it's not only the final score of the game, it's how you got there. Think about this. You have stock A, ETF A, high yield ETF A, and it's say it's 30% year to date on NAV and on total return. Okay, so it's up 30% year to date. Or maybe its NAV's up 20%, it's paid a 10% dividend. Okay, so it's up 30% year to date. Okay, then you have ETFB that's also up 30% year to date. Same thing, NAV's up and it's paid a 10% dividend, let's say. Okay, well, high yield stock A 2 months ago, its NAV was up 40%. And last month, its NAV was down 40%. And now it's kind of gone back to the middle and it's right where we described. Okay. Or let's say it's 50. It was up 50, then down 50. So, super volatile. It's kind of like, we know for ETFs like that. I mean, we've seen them before. Anyway, but then you have ETFB. Well, ETFB is at the finish line at the same place. But let's say its NAV was, instead of being up 50, was up 25% 2 months ago. And then last month, the market sold off and its NAV was down 25%. Well, the other one's NAV was down 50%. Okay. Well, they both ended at the same place. The market rallied. The one that was down more, of course, it rallies harder, so it caught up with it. I mean, we see this all the time. Which one's more valuable? ETFB is more valuable all day long. The max factor shows you ETFB. Okay, it's more valuable. And why is it more valuable? Not that you do you. You can buy ETFA if you want. That's fine. I mean, but why it's more valuable to me is because, let's say I have paper hands, which I've been known to. I haven't been bad about it lately, but everyone gets emotional. And let's say I have paper hands. If I see something down 50%, I'd probably dump out of it before then. Let's say somebody's on margin and they get margin called. The whole idea is, yes, compound interest is the eighth wonder of the world. Whoever said that was absolutely correct. And both of these ETFs are compounding the money at the same rate. They're at the same spot at the finish line. They both won the game, so to speak, but it's how they played the game. ETFB played a lot better defense, and they won this game. And the max factor, and that's a way oversimplified version, but the max factor takes all of those factors, parses it out, and it points people towards the ones that aren't doing the bad stuff or don't have as many bad qualities. Now, there's no guarantees, but so, like I say, I think that comment was probably just a misunderstanding. At first, I thought maybe they were talking to my subs and they were saying, you guys that all, think this erosion's a normal thing, but no, they're talking to me too. Anyway, it's fine. Like I say, and maybe I have this wrong, and, I'm happy to take critical comments. I'm not I could be wrong and I could be a butthead. If I'm being a butthead, tell me I'm being a butthead. I'll never take your comment down. It doesn't bother me. But I love to talk about these things so anyway, what else would you guys like to talk about? Or do you guys want to go to, it's the ninth wonder of the world. That's right. The Astrodome is the eighth. Do you know that in the 70s, there was an oil man. The guy was the guy that owned the Astros before even the Astros. I think it was when they were the Colt 45s. And it wasn't Bum Phillips. There was a rich oil. I guess he was an oil man. I bet he was an oil man. Oil men are always the most flashy people. He had a 7-story mansion inside the Astrodome, and it was like a glorified apartment. But it was, but anyway, that'd be so cool because he could sit in his living room and watch the games, and he owned the games. But can you imagine that being your grandpa? My gosh. It's nice enough to have a rich grandpa. I had a rich grandpa. I was lucky to have a wealthy grandpa, but my grandpa didn't have a 7-story building inside the Astrodome. My grandpa was a baller, but he wasn't like that. Anyway, Jeff, what are you saying? Who cares about that? Yeah, no, but I do care about the haters. Yeah, they're probably Oklahoma State fans. Yeah, they probably are. No, I hear you. Yeah, and I try not, but I take, there's been a time or two, and I've been called out by not anyone in here right now, but there's people that have hit me up an email and said, hey, you're being unrealistic about these. And there's people's opinion I respected. And we went back and forth in email, and some of the stuff they said has influenced me. And I think I'm actually a little bit less bullish than I was. So I'm prone. If you make a good, reasonable argument, yes, absolutely, I'll listen to it all day long. I think when these first came out, especially with the Defiance ones, I may have been a little too eager on those. And just being honest, I learned my lesson, and I had good talks with you guys, and and it wasn't just one person; it was a couple of people, but would email me, and we talked it out. But yes, I'm that's what I would rather be too negative on these than too positive. But then on the other hand, I don't want people to just think I'm just trashing these either. I mean, like I say, I'll trade down 50 and plus 85 all day long, But at the same time, you aren't going to turn 10,000 into 2 million with these. It's just not going to happen. Like I say, that's what you do with growth stocks. You keep your growth stocks, but use these to boost your income. Traditional Wall Street used to tell you be happy on the 4% rule, and that's fine. You can just buy a bunch of stock. You don't even have to mess with these, and you can sell 4% of your stock every year, pretty much indefinitely. So if you're, that would have worked maybe for my grandpa, but he sold options too. He sold options for income to supplement his retirement income. That's where I learned how to do it from. And the only reason I know about options because I learned about them in the 70s, and you had to have a big network your brokers wouldn't even let. So anyway, I know all about, that's how I learned all about options, but yeah, traditional Wall Street. So yes, if you have 5 mil, you're an engineer at Google and you're retiring at 5 million, by all means, just you have Google stock, get some index funds. You can live off 200,000 a year. Just sell some. You can sell your stock. That's fine. I don't care. That's a good plan too. But if you have 500,000, it's not going to work. If you have 1 million, it's not going to work. So in the past, the way if a person just had 1 million or 500,000, if a person had a lower amount where the 4% rule wouldn't cover basic expenses, you could either move in with your kids. I mean, or maybe you have a kid that's a doctor and you can whatever. But you could do that. Or in the old days, you had to buy these crappy high yield bonds that were bad investments. These aren't dividend traps. They really aren't. What a real dividend trap is what some bond funds used to be. There was some high yield bond funds, government bond funds and stuff back in the 90s, and you had to watch out for them. They would advertise a coupon, mean how much they would pay you, of 11%. But when you read the prospectus, their bond portfolio was only earning 7%. Well, they were paying you 11, but only earning 7. What does that mean? Just do the NAV. That's what you have to watch out for. I haven't seen any of these people doing that, paying out. I mean, but that you had to watch out for all kinds of scammy things like that back in the day. That was a true yield trap. Also, companies could be a yield trap. A company could come out and announce a giant dividend, but they were doing all kinds of cooking the books behind the scenes, and it wasn't sustainable. So finally, now we have these. These are sustainable. You could do what Big Y does for the rest of your life. You could sell options on the S&P 500, monthly options, and get an income for it. And that's, I mean, and it's not a dividend trap. It's not a scam. It's not a Ponzi scheme. I mean, but yes, it's a great time to be an investor. Now, it may not always be a great time. If interest rates go back to zero and volatility comes crashing down, there could be a time where these become less attractive and we have to start going into closed-end funds or BDCs or something else. But for now, it's good times, right? All right, but I do care. I hear what you're saying, Jeff, or Taz. I think your name's Jeff, but I hear what you're saying. But at the same time, I do like to address them. You thought it was Kansas City. Maybe the guys in Kansas City had a mansion inside there too. That was the Hunt family. They were also oil men, so it makes sense. I mean, that's the thing. Oil men live. I always wanted to move to Texas because when I was a kid in Oklahoma, well, one thing, we used to vacation in Dallas, and Dallas was awesome compared to Oklahoma. And I was like, I want to live here. This is what's going, what's happening. But and also the show Dallas was on, and I always wanted to be in the oil business, and wanted to be like my grandpa. But I was like, he lived in Oklahoma City. I was like, if I was like him, I'd move to Dallas. Well, at the time, I wasn't really aware of Austin, but anyway. Yeah, there's oil man and people in Texas are flashy. The women down here and the money down here, the cars. I mean, we have some flashy people. One of my neighbors has one of those station wagons. It's a Ferrari, and she's sharp looking. She has, but I don't really care for this car. It's the Ferrari, like I think it's the 812 series, the one with the long nose and the front engine, but it has like a hatchback on it. It looks kind of funny to me. But anyway, yeah, there's a lot of flashy people in Texas, and I am glad to be a Texan. All right, well, I think we've covered it all. I mean, unless there's anything else you want to talk about. Nolan Ryan is the 10th wonder. Yeah, he was a gas can on the mound. He was just, oh my gosh, he was a monster. Just, I mean, what about Randy Johnson? I mean, guy, holy cows. The series on tonight, or I forgot to turn it on, or are they off tonight? When somebody put in the comments, when's the next game in the series? I'm going to be sure to watch it. I think it's tied up right now, but yeah, Nolan Ryan. And you know what else I like about Nolan Ryan is even when he was an old man, he beat the tar out of the guy's name was Robin Ventura. And I actually knew Robin Ventura in college. He didn't go to my college, but he went to Oklahoma State. He played baseball there. He was dating a girl at my college that was in the same sorority house as the girl I was dating. And I actually knew him, shook his hand, kind of knew him a little bit for 2 or 3 years had a party relationship. Anyway, yeah, 5 years later or something, I'm watching ESPN and they say, oh, Robin Ventura charged the mound and got Nolan Ryan threw his glove down and got him like this and just beat the tar out of him. And Nolan Ryan has a ranch and wasn't he like a cattle rancher, and he probably wrangled cat. He looked like he had one of those cows and he just oh my gosh. And Robin Ventura had to be like 23 at the time, world-class athlete and a good guy, but anyway, yeah, that's one of my famous. That's one of the only famous. I also knew Bosworth in college on a social basis. He was also dating a girl, and the best sorority is my girlfriend was in also. And and I got pictures with him, and he didn't know who I was. I mean, everyone said hi to him, but Robin and I kind of knew each other. All right, guys. Well, yeah, I have all kinds of interesting stories, don't I? Did you guys ever see that? Let's look at that really fast. Let's look at that. Nolan Ryan beating up Robin. I think Robin Ventura he was a California kid. I remember, or no, the girl he was dating was from California. I think he was from California too, actually. Yeah. You don't want to mess with an old freaking man. I mean, sometimes old men have old man strength. Nolan Ryan was a hawk. He's just wearing him out. I mean, he's wearing him out. Oh my gosh. Anyway, I didn't know if any of you guys had ever seen that. While we're doing YouTube, let's do this also. Let's see. Let's type in mansion inside of Astrodome. It was a long time ago. It was like in the 60s or whatever. Look, Elvis was at the Astrodome. Secret apartment in the Astrodome Stadium. It was like 7 stories and like 10,000 feet or something. Yeah, Roy Hofheinz built a 5-story mansion inside the Astrodome. I never heard of this guy, but I guess he owned the Colt 45s or something. And they had a hotel inside there too. I knew about that. I think it was adjacent to the Astrodome. Let's watch this video. I know you guys can't hear the sound. I don't have the sound turned on. So hang on 1 second here. Let me do it this way. But anyway, I'm through talking. You guys if you guys need to go to bed, you can get out of here. I appreciate y'all being here. Let's see. Where is it when it says share the sound? Gosh darn it. Let's see. You hit add to stage. Oh, that's what it was. I have to stop it first and then add it back. Oh, it does say audio shared, but actually, though, it clicks off, though, when I do this. Okay, so now let's go back and let's check out this mansion inside the Astrodome. it didn't look super nice. I just think it'd be a fun thing to do. It'd just be an interesting flex. I just don't know which one of these is good. I mean, these YouTube shorts sometimes are just so bad. Yeah, let's look at this one. Yeah, but
this mayor brought an MLB team to Houston just so he could live in the stadium. Meet Roy Hoffhines, a.k.a. The Judge. He got that nickname because he became the youngest judge in Texas history at just 24 years old. He also later became the mayor of Houston, which is where he fell in love with the idea of bringing an MLB team to his city. And in 1959, he officially started to chase that dream when he started the Houston Sports Association. It only took them 1 year before they got an MLB team, the Houston Colt 45s. Great name. After officially getting the team, Roy decided to start his next big project, building the first domed stadium. The idea originally came from him attending a rainy game and thinking there's gotta be a better way to enjoy this game. So in 1962, they started the construction of the Astrodome. But this is where things get wild. Roy decided to build a 5-story, 24-room mansion inside the dome that he would live in full time. And the rooms in this place are nuts. Like, this is his bar room.
It looks like a whorehouse. Did you guys see that? All that red and stuff. I mean, I'm not knocking it. I mean, there's nothing wrong. I mean, there's nothing wrong with that. But it looks like a mix between that and like an old Western bar. I mean, that is cool. Look at that. Was that an organ? I mean, man, he had girls up there. This was. I mean, I guarantee you, Houston and Dallas are known to have some of the best strip clubs in the world. We've talked about this before. Also, Atlanta. And I bet a lot of other places too, but my gosh, the strip clubs follow the money around. If you live in a wealthy city, I'm sure there's a lot of strip clubs I don't know if Wall Street guys up there in Connecticut where all the rich guys live, I wonder if they have strip clubs up there. Probably so. I think that's universal. But they may be a little bit classier up there. Okay, let me play this.
Nuts. Like, this is his bar room, movie theater room. Barber shop for him, salon for her, circus-style play area for the kids, bowling alley and putting greens for the adults, other just wild game rooms. This is one of his conference rooms. This looks like his office. And he had several sitting balconies where he could just watch any game he wanted. Now, in the 60s, they estimated that he spent around $6 million to build this house. But in today's money, that's around $40 million. Just to show how big his place was, in 1988, they demolished his house to add 10,000 seats to the stadium. I don't care what anybody says. The OG Astrodome is the wildest stadium ever built. This mayor brought an MLB team to Houston just so he...
Anyway, I thought that was pretty cool. I thought that was pretty cool. I'm going to look and see if Kansas City had one also. I wouldn't be surprised if the Hunt family had one also. So that guy wasn't an oilman. But can you imagine what the mayor of Houston in the 60s, and that was when the golden age of the oil boom in Houston in the 60s and 70s. Can you imagine how much money he got under the table? Most likely. I mean, yeah, all the oilmen probably paid him off to, anyway. Yeah, I like that. I like that kind of stuff. All right, guys. Well, thank you for being here. I appreciate it. I think this has been a fun episode, and I liked answering those questions. If there's any questions I didn't get to, you can feel free to ask me in Discord. Let me give you the Discord link just for anyone who's not in already. If you do Discord, if not, you can always email me, maxconvexity@gmail.com. And if you have any suggestions for my show or whatever, I mean, I don't always check email. I mean, sometimes I check like every 2 days. So if I don't answer, if I don't answer, it either means you're trying to sell me something. I get a lot of people that want to sell me something, so I pretend like I don't see it. But it usually means I just haven't been on my email. Like I haven't checked it today, but I will. All right. So where the heck is? Let's get this over here but we can always finish this conversation later. All right. There it is. All right, guys. Well, thank you so much for being here. I really appreciate it. I really do. Guys, you have a wonderful what's left of your day, and I'll see you in the morning. Later.